Hello and welcome to another update video about Solana. Yeah, on the Solana chart, we have the situation that we rallied in a wave 1 into the January highs. You know all about that. Yeah, I just say it for new viewers because we get new viewers all the time. Wave 1 to the upside, so that indicates the trend might have shifted from a downtrend into an uptrend. We then came down in an ABC correction in what I count as a wave 2. Down here on the 10th of March, we had a trend reversal area. Price reacted to that trend reversal area and is now turning to the upside. In this rally now, I mean, we can call it rally because we did rally. We're still above the 10th of March low, but obviously now we're in a correction again. But we moved up in what I consider, again, a wave 1 of then a higher degree wave 3. Because what would happen is if this was a wave 1 of a higher degree that rallied into January, if this was a wave 2 on the 10th of March, then the wave 3 should be, I've got it somewhere here, yeah, wave 3 should take place afterwards. Yeah, so I just need to move these waves across, but that's the idea. After finding a wave 2 low, we should rally in a third wave to the upside. Now, the only thing is, at the moment, obviously, we're in a local correction, so it hasn't really rallied that much. But if we really get into a third wave rally, that should be decent and that should take us higher, even stronger than this move, because typically a third wave would reach the 1.618 Fibonacci extension at least of the wave 1, if this is the correct count, okay? And I need to see confirmation by price breaking above 2680. Until then, something different can occur, okay? Because this could still be something bearish, which at the moment I don't think it is, because the movement to the downside is very corrective. But let's just measure target to the upside. I mean, we talk here about roughly $46 in the third wave, at least, okay? So, but to confirm that we are in the third wave, I need to see price break above 2680. It's an important resistance level I mentioned before, because above 2680, you know, we are getting above that level, which where we couldn't get above in February, couldn't get above in January, where we found support in October, found support in June. Yeah, so that's an important level, and that could then take us to $46 plus. I say plus because the third wave, if it really is a third wave, the minimum would be the 1.618 extension. Afterwards, we should get a wave 4 and a wave 5 to the upside. That would be the bullish count. And by the way, let me just update the timestamp here, which I haven't done for a few days, to be honest. So important is, though, that to understand that even after we do this, it can still fail, because it could be an A wave, a B wave, and a C wave, and it could fail. So we will provide a support area after this wave 3 top is in to understand, okay, how far is price basically allowed to go down to still give us a fifth wave up. At the moment, we can't do that because we haven't got the wave 3 top in, okay? So that's something to know. Yeah, and this is the main count. Now, to make this count work out, we would obviously need to move up in this yellow third wave in 5 waves. Need to do a wave 1, a wave 2, which we're currently doing, a 3, a 4, and a 5. As you can observe here, the next rally should be a third of a third rally. So a very, very bullish rally. Yeah? Again, 2682 breakout is needed to confirm that. And to make this work, to make the setup work, and we already entered our trend reversal area a few days ago, we need to hold 1778. Doesn't mean we go down to 1778, but it means we need to hold, because a break below that would make this particular wave setup unreliable. Okay, so below 1778, a sustained break below that level wouldn't be good for the current setup. In addition to that, it would mean that price probably breaks to the downside of the descending wedge, which would be quite bearish, because in most cases, these descending wedges would break to the upside. What happens below 1778? Below 1778, we can modify the count in a way that we say, okay, there's one more bullish wave count available. And in this alternative count, the move of the January high to the downside was not a wave 2, but a wave W. This move up, an X wave, and the move down, a Y wave. A, B, and we're now coming down in C. That should be a Y. So within the Y wave, ABC. So within that Y wave then, we can come down all the way to $12. Again, doesn't mean we have to go down that low, but then at least we can lower down support all the way down to $12. But if we break below 12, we will have to focus on new bear market lows. What does that mean? That means already below 1778, the probability for bear market lows increases for new bear market lows, because until I have a break of 1778, I have two bullish setups and two bullish scenarios available. Below 1778, there's only one more bullish setup left, and that obviously increases the probabilities for a bearish outcome. There is still one bullish outcome left, or scenario left, and it's valid and likely as long as we hold $12. Just know that by just purely breaking 1778, obviously the focus needs to be more on new bear market lows. So ideally we don't get there. And now let's go into the micro, because we focus on the primary count. So at the moment we're moving in this descending wedge. In the descending wedge, we came down in an A wave, moved up in a B wave, and we could now be coming down in a C wave. A, B, C. And in the C wave, we're looking at 5 waves. So, and we could be in the last one. So the idea is a wave 1 done, a wave 2 done, a wave 3 done, a wave 4 done, and we could indeed be in the 5th wave. And the 5th wave, you know, takes its time. So you can see that in this 5th wave, we're counting an ABC structure. Oops, 1 second. We're counting an ABC structure. A wave, B wave, C wave. The reason is that I count the entire move down in this C wave as an ending diagonal. So the wave 5 of C consists of A, B, C. A wave done, B wave done, and we could now be indeed in that C wave. So it's quite confusing, but anyway, it just means that we could be really in the last sort of wave. So that we had a wave 1 done, a wave 2, and we could now head down in the 3rd. There should be a 4th and a 5th. We're currently holding the $20 level here, but a break below that would send us down quite quickly, probably to 19, because this is quite relevant support. But if we lose that level, could send us down quite quickly to 19. So I would expect in this current correction to see at least $19. But if we break out of the wedge to the upside, then it could be an early breakout signal. So that's sort of my summary of the Solana chart and my analysis. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter. I think a lot of people don't know that we're actually on Instagram and Twitter as well. Just make sure you follow the correct accounts. Yeah, you can find the links in the video description and also our handles at the beginning of the video. You will find here additional content that you don't really find on YouTube on our channel. So, you know, we provide some signals sometimes, not as many as we provide in the channel membership, but here and there. But also stuff about mindset, about trading that might help you, give you some food for thought. And you can find that on Instagram as well. Just one word of caution, just make sure that you don't follow any scam accounts, and make sure that you understand we would never send you direct messages on social media until or unless you messaged us first, because there are scammers around. Just be aware of that. Okay, that's my update about Solana. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.